All right, let's jump into another deep dive. Today, we're going to be exploring something, you might not think about every day.
Mhm.
Unbanked households
Yeah.
right here in the U.S. And we've got some really interesting excerpts from a 2025 research paper
Okay.
by the Federal Reserve Bank of Philadelphia.
Wow.
It's called Who Remains Unbanked in the United States and Why? And what's really fascinating is, even though the overall numbers of unbanked folks are going down,
Right.
there are some pretty big disparities that are actually getting worse.
Yeah.
So are you ready to kind of dig into this with me?
Let's do it. I think it's one of those things where the headline numbers, like you were saying, sound really promising.
Yeah.
The unbanked rate dropped from 7% in 2015 to 5.4% in 2019 and even further in 2021.
That's great.
Yeah, that sounds great.
So problem solved.
Well, not quite.
Okay.
The researchers highlight how that decline was likely influenced by a stronger economy
Okay.
and things like pandemic relief programs that maybe inadvertently got more people interacting with banks.
So almost like they were forced to.
Yeah, kind of a forced hand situation for some folks.
Okay, interesting. But then how does that explain, the gaps that are widening?
Yeah, that's the million-dollar question,
Yeah.
right?
Yeah.
While overall unbanked rates have improved, the gap between certain groups, especially like Black and Hispanic households
Yeah.
compared to white households, has actually persisted.
Interesting.
And it's pretty striking. So, for example, in 2019, Black households were more than 5 times as likely to be unbanked
Wow.
compared to white households.
5 times. That's a huge difference.
It is.
I have to admit, I kind of always assumed, that low income was the main reason
Sure.
people were unbanked.
It makes sense.
Yeah. Like can't afford the fees, can't afford the minimum balances.
Yeah, all of that.
Makes sense to me.
It is a factor, for sure. The data shows that pretty clearly, households making under $15,000 were significantly less likely to have a bank account
Right.
than those earning over $75,000.
Okay.
So that tracks. But what surprised me was that even after the researchers kind of accounted for income,
Yeah.
education level, race, employment,
So all these other things.
all these other things, all those potential influences,
Yeah.
income was still the strongest predictor, but it wasn't the whole story.
So it's more nuanced than just saying, like, if you make this much money, you'll be banked.
Exactly.
It's more complex than that.
I'm really curious now about what those other factors are.
Yeah.
The ones that go beyond just like, the pure income piece of it.
Well, one thing that's really fascinating is the impact of digital access.
Oh, interesting.
We kind of assume these days that everyone's online,
Right.
but the reality is quite different,
Yeah.
especially back in 2019, households with internet access were 3 times more likely to have a bank account.
And it's even more interesting. If you had a smartphone,
Oh, wow.
you're even more likely to be banked compared to those with like no mobile phone at all.
Wait, so just having a regular cell phone wasn't even enough?
Not really, no.
It had to be a smartphone.
A smartphone seemed to make a significant difference.
That's kind of blowing my mind right now.
Think about it this way. Someone who's never really used the internet,
Right?
maybe they grew up without it, maybe they can't afford it,
Yeah.
or even if they have access, like at the library,
Mm-hmm.
they just don't feel comfortable navigating that online world.
Yeah.
So for them, online banking is not just inconvenient,
Right.
it's practically a foreign language.
It's like you're not even invited to the party,
Exactly.
and you don't even know how to speak the language anyway.
It's a huge barrier.
Yeah, but wouldn't you think that banks would, really be pushing to get everyone,
Yeah.
no matter what your skills are, no matter, your comfort level?
You would think so.
Right.
Yeah. But the research suggests there's almost like this feedback loop happening.
Okay.
As more banking moves online,
Mm-hmm.
the people who aren't online
Right.
get left further behind.
They're just out of the loop.
They're totally out of the loop.
Yeah.
And it's not even just about like the practical stuff, like paying bills or whatever.
Right. Yeah. Right.
It's also about feeling like banks even want your business
Yeah.
if you're not part of that digital world.
Like you're not even worth their time.
Exactly.
Wow. So it's this digital divide that's actually amplifying some of these gaps that we see.
It seems that way.
Yeah.
And that's why this research is so important, I think.
Yeah.
Makes us think about those unintended consequences.
Right.
We can't just celebrate the fact that the overall numbers are declining
Right.
if we're not paying attention to who's being left behind.
Yeah, exactly. And it makes you wonder, are we almost creating a 2-tier system
Yeah.
by accident?
Yeah, it's almost like we're accidentally creating a system where Yeah. If you're not digitally connected,
You're just out.
you're out.
Yeah, wow. And the trends get even more interesting when you think about what was happening, between 2015 and 2019.
Right.
So kind of that pre-pandemic time.
Exactly. The time period this research really focuses on.
Right. When things were relatively stable economically.
Yeah, at least compared to what came later.
Yeah, for sure. So what kind of shifts did they see in those years? Did the gaps stay the same or did they change?
Well, some of the shifts were pretty unexpected, to say the least.
Okay.
For example, the gap between employed and unemployed households actually narrowed during that time.
Oh, interesting.
Yeah, you would think that having a steady job would be like a major factor in being banked.
Yeah, totally. Makes sense to me. More income,
Yeah.
more stability, probably more likely to need those services.
Exactly.
Yeah.
But the data shows that gap actually shrank.
Huh.
The researchers think this might have been due to the improving economy at the time. Shorter periods of unemployment meant that people were bouncing back faster,
Right, right.
keeping their finances in order,
Yeah.
and maintaining those banking relationships.
So almost like a rising tide lifts all boats kind of situation,
Kind of. Yeah.
even when it comes to bank accounts.
Even when it comes to banking.
Interesting. But I have a feeling, not all the trends during those years were positive, right?
Unfortunately, no.
Okay.
While things were looking up for those who were employed,
Yeah.
a concerning trend emerged for single individuals
Okay.
and folks with disabilities.
Interesting. So what happened with those groups?
Well, the gap between them and the general population actually widened between 2015 and 2019.
Huh.
And this is where the research gets really interesting
Okay.
because it points to the role of social isolation.
Social isolation. How does that play into this? How does that have anything to do with like having a bank account?
Well, think about it. If you're living alone, maybe you're less likely to have someone to kind of help you navigate a complicated banking system.
Okay. Yeah.
Or if you have a disability that limits your mobility,
Right.
it might be harder to physically get to a bank branch,
Yeah.
especially if you live in an area with limited public transportation.
Yeah, that makes sense.
So it's not just about income or even digital skills at that point.
Right.
It's about having that support network, that connection to the broader community.
So it's almost like financial well-being is really tied to social well-being.
They're very much interconnected.
Yeah, that's really interesting. And what's fascinating is that the researchers found that these gaps were even more pronounced at the state level.
Right.
So it's like where you live really matters too.
Location plays a huge role.
Yeah. Okay, so tell me more about that.
Absolutely. So they did this really cool multi-level analysis where they looked at like state-specific factors that seem to influence unbanked rates.
Okay.
And one of the most interesting findings was related to financial literacy.
Okay, now I'm really listening.
So you ready for this?
Yeah, tell me.
They found that states with lower 8th grade math and reading proficiency scores
Okay.
actually had higher unbanked rates overall.
Oh, wow.
So it's like those early educational challenges
Yeah.
can have this like ripple effect that
Okay.
lasts into adulthood.
So if you're struggling with basic math and reading,
Right.
understanding complicated financial products,
Forget about it.
yeah, is going to be a nightmare.
Exactly.
But it's not just impacting individuals, it's like it's impacting entire states.
Whole communities, yeah.
Oh, wow.
It really highlights how interconnected
Okay.
everything is.
Yeah.
Education, financial literacy, access to banking, even social isolation.
Right.
It all feeds into this bigger picture of financial inclusion.
And it's not just like a theoretical thing, right?
Wow.
The researchers actually looked at the data
Oh, yeah, they dug deep.
for each state.
They wanted to see how things played out in different contexts. So they could compare, say, the likelihood of someone being unbanked in Mississippi versus California.
Right. And they were able to do that.
Exactly.
They had the data.
They used Pennsylvania as a sort of baseline for comparison,
Okay.
and they found some really interesting variations.
Okay, wait, hold that thought.
Okay.
Let's save that state level breakdown for part 2 of our deep dive,
Right, okay.
because we've got a lot more to talk about.
And we do.
We haven't even touched on the payday lending piece,
Right.
and that's where things get really interesting.
That's where things get really crazy.
Yeah, so stay tuned for part 2.
That's going to be a good one.
Okay, we'll be right back.
See you then.
Welcome back. So before we get into that whole payday lending thing, you were telling me how my state compared to others when it comes to those unbanked rates, right?
Right. Remember how Pennsylvania was the baseline in this research?
Yeah.
Well, for people living in listener state back in 2019, they actually had lower odds of being banked compared to Pennsylvania.
Hmm.
And it wasn't just like a small difference either.
Oh, wow.
It was statistically significant.
So my state's really doing better struggling then, huh? I guess location matters more than I thought.
It seems to.
Yeah. Okay, but let's talk about payday loans.
Okay.
You said the research found something kind of like counterintuitive?
Yeah, this was one of those findings. It's like, wait, what?
Okay, I'm intrigued. Tell me.
Basically, in 2015, states with stricter payday loan regulations
Mm-hmm.
actually had higher unbanked rates.
Hold on.
But by 2019,
Yeah.
that relationship had completely vanished.
So tighter regulations meant more people were unbanked.
Initially, yeah, it seems that way.
But I thought those regulations were supposed to protect people from predatory lending.
That's the idea.
Like, wouldn't that make it easier to stay banked?
You'd think so, right? It's definitely counterintuitive.
Yeah.
But one theory is that payday loans, at least in the short term,
Uh-huh.
might have been a sort of safety net for some.
Okay, now that sounds counterintuitive.
I know, right?
How could a high-interest loan help someone stay banked?
Imagine you're facing a sudden expense, like a car repair or a medical bill,
Right.
and you don't have enough in your account.
Okay.
A payday loan, despite its high costs, could actually help you avoid overdrafting
Okay.
and potentially getting your account closed by the bank.
So it's like they're choosing the lesser of two evils.
In a way.
It's like, okay, I'll take this payday loan,
Yeah.
even though it's going to cost me a ton,
Mm-hmm.
just so I don't have to deal with losing my bank account.
Exactly.
Wow.
It's not ideal,
No.
but those bank fees can really hurt.
Right, especially if you're already struggling.
Exactly. So it's like a desperate measure
Yeah.
to avoid a worse outcome.
Okay, but you said that effect disappeared a few years later.
Right. By 2019, that link between payday loan regulations and unbanked rates was gone.
Huh.
The researchers suggest a couple of reasons for this shift.
Okay.
One is that as the economy improved, people probably relied less on those payday loans.
Right, they didn't need them as much.
Exactly.
Okay.
But there's another factor at play, too.
What's that?
The rise of online lending platforms.
Oh, interesting.
These platforms often have different regulations,
Okay.
and they might be more accessible to people who don't traditionally qualify for a bank loan.
So even with stricter payday loan laws, people found other options.
Exactly.
Online.
It's like a tech workaround, almost.
Wow, that's so interesting.
It just shows how complex this whole thing is.
Yeah.
It's not just about individual choices or even government policies.
Right.
It's about technology, the economy, access to information.
Right.
It's everything.
It's like a whole ecosystem. And it brings us back to one of the most important, consistent findings of the research.
Yeah.
You know that racial gap that we talked about before?
Right, the one that just won't go away.
Black households are way more likely to be unbanked than white households, even after controlling for everything else.
It's a persistent problem.
It really does suggest something deeper, something systemic going on.
Absolutely.
Yeah, so what did the researchers say about that?
Well, they acknowledged that the data can only tell us so much to really get at the root causes.
Yeah.
We need more detailed information, more granular data
Okay.
to really pinpoint those structural barriers.
So what kind of information are we missing? What would be helpful to know?
Think about the things you need to build a stable financial life,
Okay.
a safe place to live, access to healthcare, reliable transportation.
Yeah, the basics.
Exactly. Those foundational things impact your financial well-being, which then affects your ability to have a bank account.
It's like you can't worry about managing your money if you're worried about where you're going to sleep tonight.
Exactly.
Or if you can't afford to see a doctor when you're sick.
It's all connected.
And for communities that have faced, discrimination and systemic disadvantages, those basic needs are often out of reach.
Sadly, that's true.
It's a vicious cycle.
It really is.
It makes you realize that financial inclusion isn't just about, having that piece of plastic.
Right. It's bigger than that.
It's about opportunity.
It's about having the resources to build a secure future.
Yeah.
And for many Black households, those opportunities have been limited. Systematically, yeah.
Wow. This is feeling less like a conversation about bank accounts and more like a conversation about social justice. Because we can't fix one without fixing the other.
They're two sides of the same coin.
Yeah, that's a really good point. So where do we go from here?
Well, in the last part of our deep dive, let's focus on solutions.
Okay, I like that.
We've talked about the problems. Now let's think about what we can do.
Yeah, how can we take all this knowledge
Right.
and actually make a difference?
Exactly. What can policymakers do? What can communities do?
What can we do?
Stay tuned for part 3.
We're back for the final part of our deep dive, and, my head is spinning with all this stuff about unbanked households.
I hear it.
It's a lot, but now we got to shift gears a little bit.
Right.
We got to talk solutions.
Yeah, let's get practical.
What can we actually do?
Well, the research actually gives us some pretty good starting points.
Okay.
And I think a big one is that connection between digital access and being unbanked.
Right. We talked about that.
Like not having internet or even just being intimidated by tech.
Yeah.
That can be a huge barrier.
Yeah. So how do we fix that? Do we just give everyone a free computer?
I wish it were that easy.
Right.
It's going to take more than that, but you're thinking in the right direction.
Okay.
We need to bridge that digital divide, and that means a multi-pronged approach.
Okay. So what? Give me the prongs.
Well, first, we need to invest in broadband infrastructure.
Okay.
Especially in rural areas and underserved urban areas.
Right, where people just can't get online.
Exactly.
Okay.
Then we got to think about affordability.
Right.
Like even if you have internet access, can you actually afford it?
Yeah, that's a good point.
So policymakers could look at things like subsidies for low-income households or promoting competition among providers to bring prices down.
So it's like you're creating this pathway to digital inclusion, which then helps with financial inclusion.
It's all connected.
Okay, I like it.
But even with all that, some people might still be hesitant about online banking.
Right. They might have had bad experiences.
Exactly. Or they just don't trust it.
Yeah. So how do we address that?
That's where digital literacy training comes in.
Okay, I like that.
Imagine community centers offering workshops on how to use online banking safely.
Right.
How to spot those phishing scams.
Yeah, those are everywhere.
They are. So it's about giving people the skills and confidence to navigate the digital world safely.
Okay, so we're getting people online, we're teaching them how to use it.
Right.
But we also talked about that social isolation piece.
That's a big one.
What about the folks who are maybe just overwhelmed by the whole financial system?
Right.
Or they don't have anyone to ask for help?
I think community-based initiatives are key here.
Okay, tell me more.
We need targeted financial education programs.
Okay.
Like workshops that are tailored to specific needs.
So not just a one-size-fits-all approach.
Exactly.
Okay.
Maybe it's a session for seniors on how to use mobile banking apps.
Yeah, good idea.
Or a program for new immigrants.
Right.
Explaining how the U.S. financial system works.
It's like meeting people where they are.
Exactly.
Recognizing that everyone's different.
Everyone learns differently.
Yeah. What about, support groups?
Oh, that's a great idea.
Sometimes just knowing you're not alone.
Right, that can make all the difference.
It'd be really helpful.
Sharing experiences, learning from each other.
Yeah.
Building that sense of community.
Yeah, I love that. Okay, but what about the banks themselves?
Ah, yes, they have a role to play too.
I mean, some people might be scared to even walk into a bank.
I understand that. There's a lot of distrust.
Yeah, so how do we get the banks on board with all this?
Well, they can take steps to be more welcoming.
Okay.
And more accessible to underserved communities.
Give me some examples.
Think about offering low-cost or no-fee accounts.
Okay, that would help.
Partnering with community organizations to offer financial education.
Right.
Even just rethinking their branch locations.
Well, it's not just about the products they offer.
Right.
It's about the whole experience.
The whole banking experience needs to be more inclusive.
Yeah, it's like you said before, one size doesn't fit all.
Nope, not at all.
We need a financial system that's flexible, adaptable, and truly inclusive.
I agree.
And there are programs out there that are doing this, right?
Absolutely.
Like that Bank On program we talked about.
That's a great example.
They've set these standards for safe and affordable bank accounts.
Right, so people can actually find options that work for them.
It shows that things can change.
For sure.
When everyone works together.
Collaboration is key.
Yeah, well, this whole deep dive has been honestly kind of amazing.
I'm glad to hear that.
I've learned so much, and it's really got me thinking about, what I can do.
That's what we want.
But before we wrap up, I always like to end with a thought-provoking question.
Okay, I'm ready.
So what's one question you'd leave our listeners with today? Something to really ponder.
Here's one. Given everything we've learned about this complex issue and knowing that financial inclusion is so important.
Right, for everyone.
What's one small step you can take today to either improve your own financial awareness or support those in your community who might be struggling?
Ooh, that's a good one. It could be checking out that Bank On website, volunteering at a financial literacy program, or even just talking to a friend about their financial goals.
Sometimes those small conversations can make a big difference.
I think you're right. Well, thanks for joining us on this deep dive.
It's been a pleasure.
Until next time, keep learning, keep exploring, and keep striving for a more inclusive